and the main man, the professor extraordinary, cowboy himself. You're listening to Algo Factory free live right here on YouTube, where we go live every single day for 30 minutes or so, and then we hop off to our member only lab. Now, look, I don't know about you, but I don't like leaving money on the table. And if you're not joining Algo Factory, you're leaving money on the table. What do I mean by that? There are very few exploits for you that would help you to capitalize on earning a significant income while you're going to work, while you're doing your day-to-day, until this income grows and is able to supplant even what you're doing for your 9 to 5. Algo Factory provides the education to get you there. This is the only place where we not only teach you how to trade, but teach you on how to build your algorithms. And when you join the class, you're learning through immersion, which is the best way to learn, particularly a subject like this. So with that out of the way, Cowboy, good morning. How are you, man?
Doing pretty good. How about yourself?
I'm doing great, man. It's Monday. It's fun day.
Yeah, Monday, fun day.
Exactly. It's the day we kind of set up ourselves for the week, right? I mean, especially with the trades, with everything else.
Well, yeah. I mean, for the people in the private group, actually, they saw me on there yesterday, talking, setting up. I was looking through, of course, all the regular charts that I look through, plus some small caps. So, looking through some small cap stocks. Just kind of finding what is going to be good. What's available to trade. I did even take a small short trade on Bitcoin. It's a very contrarian move. Everybody out there on crypto Twitter is, it's going to go higher. It's going to go higher. Well, it might be right. It might be right. I mean, it's I can see in the what do you call it? I can see in the charts why people are saying it's going to go higher, and I even have some algorithmic data that suggests it could very well go higher. But the reality is, it's Bitcoin's a tricky beast, and I've been trading it for a long time. And so, one of the most important parts of my trading algorithm is actually to take a good look at market structure and make sure that gets played. And we can talk about that play this morning. The last conversation we had, I think it was around money management, but the one before that was market structure on the beginner lab. So that was on Thursday. So, quick disclaimer, everything we talk about is entertainment, education, just our opinion. None of it is investment advice. Please consult your licensed investment advisor before risking your money on the markets because you can lose money. It is a risky thing to do. However, what we do here is we teach people how to trade. Basically, we have basic courses that teach people things like what is a candlestick. It really kind of starts you on the basics. If you go over to our website, which I'm going to put up here right now, it's www.algofactory.tech. And if you head there, you'll actually see, of course, you have to sign up to have access to the classes, but we have about 4 courses and 50 some odd videos with exercises on there that teach you a couple things. Firstly, we teach you the basics of the basics. You might have to kind of reach out and find some more basics by going into, like, say, our Telegram room and asking us questions. Trading basics, if you want to, if I was to make a video on trading basics, it would be like 1,000 videos. It would be ridiculous. So that's actually pretty crazy. But I did, what I can just to start it out. We're in the Telegram 24/7. We can always answer questions or point you in the direction if you have other basic questions. And then, of course, we teach the basics of building a trading algorithm. And an algorithm itself is actually a simple thing. It's not what a lot of people think it is, where it's some, guy with really thick glasses and a hoodie in front of a supercomputer, and, he hijacked a government building and, he's putting in his code. And no, it's more like, you tying your shoes as an algorithm. It's you have a plan, you have conditions A, B, and C, they line up, and then you take actions X, Y, and Z as A, B, and C happen. That's an algorithm. That's it. Driving to the store is an algorithm. You got to go left on this street, right on this street. If this street's blocked by construction, you go the other way. So it's as simple as that, really. And then what we do is, if somebody has been able to build an algorithm that works manually, the old-fashioned way, just going back through the trading and going back through the charts, back testing, forward testing. Once they have something that is reasonably feasible, we can point you down the direction. We have somebody who is in-house, can actually help you turn it into code and code your algorithm so it can actually trade for you while you're sleeping, trade for you like a robot without emotion. So, we have the whole kit and caboodle here. And of course, the person who is coding, they don't do it for free, but they do it for, a price that's going to be better than anywhere else you find. So I did throw up the QR code on the screen as well. So if you were to, I don't know, if you use your phone to find that, a lot of people are kind of maybe looking at their computer. They can take a picture of that and it'll take it over to their to our website as well. We're $49.99 a month. Let me say that properly, $49.99 a month. That is promotional. So basically that's not going to last forever. We actually would need to raise the price just to keep the doors open right now. We're doing it just to find the faithful and the few who want to get in with us early. And then as we raise the price, those who are with us and those who do not let their membership lapse with us, get to be grandfathered in at that price for that tier of service. So, it's for what we're offering is worth hundreds of dollars a month. We offer an awful lot. And of course, this is a free dose of the basics. So you're not going to get too far into like algorithm building on these sessions. In fact, what we do is we look at the chat, and speaking of the chat, we got VM in there this morning with us. Good morning. Love to have you. We have a few people over in our private room, Sourdough, Claude 2000, a few others. So thanks for joining us today. I know there's more people than who are talking. So, but that said, if people have questions, then yes, I can answer them. Claude 2000 is asked a question about one of our tools. I'll answer that in more detail during our private group. That's actually an advanced tool that we don't generally talk about here on the beginner show. But Claude, we'll get to you on that one. So let's see. I guess we can talk about market structure. What do you think of that? I know we talked about it already, but we can talk about it.
Let's do it
as it applies to trade.
Yeah, let's do it.
All right, cool. So I took a basic trade. It was a pretty risky trade on Bitcoin. And one thing about trade, there's a couple of things to look at. There's a lot of things to look at trading, but in this particular discussion, we're going to talk about market structure and a little bit about risk to reward ratio. Okay. And it actually goes to a question that was asked by Sourdough, who is one of our private members. And it's an important question for people to understand. Look, trading can be profitable, but is it profitable enough? Right? That's a question you need to ask yourself as you're building your algorithm, as you're back testing, going through, because you can win like more trades than you're losing, or you can have a really good risk to reward ratio and you're winning enough trades to be profitable. But is it going to actually make sense for you? Like if you're just making 0.1% per month all the time you're spending doing this, is it worth the time that you're spending? And that answer is probably not. So one of the ways to control your profitability is going to be something called risk to reward ratio. Okay. So we're going to talk about that as we get into the Bitcoin trade that I took. And let me go ahead and fix my screen before we even get into it. And this trade is in process. Again, it's a high risk trade. I took over a weekend during a low volume period, but I took it because of market structure. Okay. So, and I had a relatively low entry amount in this. So let me zoom in before I share the screen so everybody can see the values and the clarity. I use this 75-inch screen that I mounted to the wall for this kind of thing. So it's easy for me to see when it's not zoomed in, but not easy for the audience to see. Okay. So here we go. Share. Okay. So what you're looking at is a trade that I took. And it was based on the breaking of some structure. And it could stop out. Any trade can stop out. But because of this risk to reward ratio is so rich, if this stops out, I don't care. Like, it's one of those things where I'll take 10 of these and not care if it stops out. Like, because I know that my hit rate on this kind of trade is at least 50%. with Bitcoin itself. It's higher with forex pairs, but with Bitcoin, it's a little better than 50%. And what you're looking at here is Bitcoin made this huge rally up, got a lot of news. There was the Hong Kong, pushing crypto. The government over there is actually encouraging, exchanges to go with crypto. There's a lot going on there. And then, of course, we had this, BlackRock supposed spot ETF, although it's arguable whether or not that's a spot ETF. But then you had also Fidelity and some other household names that are all kind of, getting into, like building a crypto exchange and things like that. So long story short, the rise up in Bitcoin, I think was going to happen anyway. If you look back at the macro, it was kind of ready for a move up. So, and you'll find if you watch the news that a lot of these big announcements happen right as price is supposed to go up or is already starting to go up, right? So my theory behind that is you got a lot of big money out there. They accumulated, say, during this period where price was just choppy and in the kind of mid 25s, if not way sooner. They could have accumulated, and they probably have been accumulating since prices at 15,000 a few months ago. But once the chop kind of ended and all the metrics were saying, okay, price is probably going to go up, that's like when the big news hit, right? And so, as a matter of fact, this candle right here that I'm going to put an arrow at, that candle right there, that white bearish candle, I kill them. I don't use red and green for candles, first of all, as you can see. So that's for psychological reasons. I don't want red to scare me or green to make me too happy, right? But this dump right here was when like the SEC put out the lawsuit against Binance and Coinbase, and that happened right there. So that crushed price down, or at least it got people to panic. And I'm willing to bet folding money that a lot of smart money bought right here, because they knew that there was going to be news coming out with BlackRock and Fidelity in Hong Kong and all that stuff, and then price went ahead and went up like it was probably supposed to. So anyway, that's a theory, and it's I guarantee you it's a solid one, because I've been doing this for quite a while. I've been watching Bitcoin charts since 2017. Probably know my SHIT by now. But I'm going to zoom out just a little bit, okay? And I'm going to look at a little bit higher of a time frame so that we can assess the overall look. Okay, so there's some structure to look at with Bitcoin right now. You have this high right here that was made back in April. And so Bitcoin kind of, it pretty much almost pierced 31. I mean, it barely touched 31, right? And then it headed down in what looks like kind of a nasty looking bull flag. And then it moved up again. And a lot of people think that this is going to extend, and it may very well. I mean, I'm not saying it's not going to go up, but if we were to even treat this like a bull flag, then this could be like a measured one-to-one move to take us to about 36,000. And if price were to break above this prior high, and it already has broken above, but it didn't close above. So the prior high from April is about, what is this number? 31,000, we'll say. I mean, really right on the money, 31,000. And price went ahead and reapproached that prior high. And this is the market structure conversation, right? So as price hit that high and wicked above it, there was a lot of liquidity that was above there that got taken out. And we talk about liquidity in our more advanced course, but long story short, people who are trading derivatives have their stop losses up here, right? So basically they went short, and the price was not evidently quite ready to go past that area, so it took out all their stop losses, right? Maybe they went short right here back in April, and so they bet on the price going down, and their trade looked like this, maybe something like that. And they bet on the price going down, and maybe they think it's going to go to here. And so there probably is a fair amount of liquidity up here. I'm not, I'd have to look at the historical liquidity charts, but at that same time, price never made it all the way down. In fact, there was some structure right here created by a pivot back in this area, and price bounced right off of that and made that big move up. And so that means that all these people scheming and, all these like big money people, I mean, I'm not saying that they chose this area to put out their China BlackRock Fidelity news, but I'm saying they very well could have, because they make an awful lot of sense when you have structure sitting right there staring at you in the face, right? So they probably planned that. Now, why not? I mean, the market's going to give what the market gives, but they can augment what the market's going to do. So that's that situation. So price did move back up, and there was this pivot that was created right here, right? And that pivot created market structure because a lot of people sold right here and a lot of people went short right there. So price headed back up, and it did not yet pierce that high. And as a matter of fact, it may it might hang out down here. It might create a new range. If price heads down back to this 25 area, we might see a new range get built. But technically, I'm not comfortable saying that it's been built, but there is some price action back here with a pivot right there and this drop right here where there's some really big moves at the top and the bottom of what could be the new range. Okay, I'd like to wait until there's one more bounce off to say it's in a range. I'd prefer to wait to say that. So what may happen here though is, and this trade that I took is a small trade. Bitcoin is known for, you can see it right here. It mobbed up from what, 19,000, 19.5 all the way up to 30,000 and then down, right? So these big bull candles that you see, you can't be afraid to sell into them. You just can't be afraid to get stopped out. You can't be afraid to lose a trade on a good risk to reward ratio. So what I did was I had a small trade based on this prior high that price won't go past it. And it may very well go past it, but that's fine because most of the time it's not going to. Most of the time. On such a large pivot like that, your chances are real high. So if I can actually set a trade once I see some action here in my algo, say, okay, I got the minimum amount of algorithmic justification for this trade. So which means I took the smallest trade that I would normally take. And so here we are seeing if price will go ahead and move down. And that's why I took that trade based on that market structure. Okay. So the advantage of taking a trade where I took it right here is that look at this trade box that I've got, this short box. I'm going to go back to the lower time frame and we're going to take a look at it on the 2-hour chart. And so price has a lot of room to move down. And then if it goes against me, I'll be out of the trade pretty fast. So that means that all this room to go down is profit. And it's based on liquidity nodes way down here. When I took this trade, there was barely any liquidity at the top. And market makers need liquidity for money. And we use a certain tool for that. I probably, if you look back on all the beginner live labs, there's probably some discussion around the tool that I use for liquidity. So that would be a reason for you to go back and look if you're really that interested in how I find liquidity. There's a free tool out there, although you can pay for a better version of it. You can either go back and look at all of our live labs to find that, or come join Algo Factory. That's a pretty easy thing to do. Just head over to that website right there on the screen, www.algofactory.tech, and come see what we do. But if price, let's just say I put $100 on this trade. It's a little tiny trade, right? So $100, who cares? In the world, if you're at a certain level, right? So if price heads down, I make nearly $700 because this is a 6.86 to 1 risk to reward ratio. Okay, so 6.86 to 1 RRR. Okay, what does that mean? That means that for $100 that I put in, I make $686 if the trade goes all the way to target. Now, I do have algorithms that allow me to exit a little bit early or to take some profit off the table on the way down, or but if price were to actually head down, for example, let's say price kind of hangs out here and then heads down a bit, then it's probably going to come for a bearish retest right here and then start to head down. Now, will it make it all the way down? Maybe it will, maybe it won't. But as it makes it that bearish retest, I'll be able to say add a little bit of a bigger trade because more structure has been broken. In fact, the whole reason I took this trade was because local structure got broken. Okay. So what do I mean by that? Well, in the trade, we had this high right there where price pierced its prior high. That prior high, that this one here, the 31,000 high. Price dug in there a bit, went up to about 31,400, headed back down, went to the top to retouch the top of that same 31,000 area before. So it tried to get above there once more and failed. Okay. In fact, technically, there might even be like a head and shoulders in here somewhere. I didn't trade it that way, and it would be kind of a weird looking head and shoulders. But if I were to have traded that, it could have looked something maybe like this. It's not, Bitcoin's never clean. But technically, if I were trading head and shoulders, I could have entered way up here. It wasn't something that I noticed right away. And it's a super weird looking head and shoulders. It's not ideal to trade, in my opinion, and that's based on just pure experience. But it's there. So there's that, but it's not how I traded it. What I did was I saw that price pierced that high from April, tried to pierce it again and failed, and then headed back down. And then we had this bit of local structure that was created. So the local structure is going to look like this. Okay. So if I were to go back in time, we would have noticed price try to break through that box. So let me go ahead and go back in time with the replay function. I have a whole class over at algofactory.tech for the replay function. Okay, so if we go back in time to before this structure was created, right? So this structure, it kind of existed because it was at the top of this area right there. So we could extend it back here a bit if you want to. Technically, it's not what that's fine, but I'll hit the play button here, and you'll notice that price it tried to break below that area once, and it got rejected right there. So it tried to break below, got pushed back up, tried to break below once again. That's where it tried to rally up. It got rejected trying to rally up above the prior high, and it got rejected at that old structure from April. And then price went down again to test this structure right there, right? And then bam, broke below that structure. Now we do have this structure with which to contend. So there is the bottom of this area, and that is why I took a pretty small trade, because this area is also some structure, right? So now price is dealing with trying to break through this area right here, this long wick right there, and all the structure created by this prior area, right? But because price spent a lot of energy getting up here and the bulls tried to rally again, I'm like, okay, this looks like a trade I can get into nice and early that might go down pretty far, and I can make a really high risk to reward ratio on this. So I'm going to go ahead and take a risk, because that's trading is all risk. And price actually did try to it tried to stop me out over the weekend. So this trade actually wasn't entered until like around this time. Let's see, like around here, something like that. Now I have to redo everything, but 6.86. There's something like that. I'll have to redo that a little bit, but that's basically what the trade looked like. And it did try to rally up and stop me out. Is this it? Man, I need to go. Now I've screwed up all my stuff here, but anyway, something like this. It was within this one candle right here that you're seeing that price tried to stop me out. So anyhow, it didn't. I'm still in the trade. It's a beautiful trade. and it went below the structure. Now it has to beat this structure, and if it doesn't, that's fine. Now, if price goes below this box, what'll happen now? Just to illustrate this, I'll have to go back and fix my box here, but it's more or less correct. If price does break below this, it might go all the way back to the top to have a bearish retest and then keep heading down. And if that's the case, then, you know, that's a beautiful trade to enter right there. Now, it's not as sweet as right here. I got in nice and early, right? So that's, you know, I got in so early because I took a higher risk. It's a higher reward, which means I put in less money. But right here, if I do have a bounce off of here, I can enter a bit more money because now it's contending with structure. What this support actually became like a resistance. It's on the way down. So that's what Bitcoin looks like, and that's how I'm trading it. So that's that. That's what that looks like. It's now 7 o'clock, so we got to get the Gorilla send off. We can go join over to the private group and talk more about that secret tool.
All right, all you YouTubers, all you that are listening for free, look, don't leave money on the table. Do not leave money on the table, because that's what you're doing if you're just listening in and you're not part of Algo Factory. Do it right now. Join algofactory.tech. Make it happen for your life. Upgrade your life. Trade in your job. And with that being said, Cowboy, take us to the lab.
All right.